understanding foreclosure and what to do about it. Owning a home is something many Americans aspire to, whether a traditional ranch, a two-story cape, or a studio apartment in a city high-rise, doesn't really matter. What does is that home ownership, no matter how big or small your place, comes with a certain set of responsibilities. One of the biggest responsibilities is a mortgage, because with a mortgage, your house becomes collateral for the money you borrowed, and you'll have to pay back that amount plus interest. Unfortunately, sometimes life doesn't quite go as planned, and things can go wrong. For example, you might find yourself in a position of not being able to make your monthly mortgage payments, and that can happen, well, for a lot of different reasons. Maybe a layoff or some other loss of income, or even an unexpected expense like a hefty medical bill. Another reason could be that your interest rate rises to a level where the monthly payment is no longer manageable, as it's sometimes the case with an adjustable rate mortgage. And with not being able to make your mortgage payments, you'll eventually find yourself in a very difficult situation called foreclosure. So, we're going to fill you in on some of the most important things you should know and some options to consider. That way, you'll better understand how the process works and learn how to deal with it if you happen to find yourself in that unpleasant position. First, and this is going to sound obvious, do everything in your power to pay your mortgage. It's important because if you stop paying, you'll quickly find yourself in something that's called default. Now, if you miss a payment, your bank will contact you asking for your overdue payment. And once you're 30 days past due, you're in default of your mortgage, which means your missed payment will be reported to the credit agencies, and that is never good. Typically, once you're 60 to 90 days late, you'll get a letter notifying you that foreclosure has begun. Foreclosure is a legal process that a mortgage lender uses to try and recover the money loaned to you to purchase your house. And as part of this process, the homeowner is evicted from the property, which is then sold to repay some or all of the outstanding mortgage balance. But you should know that the foreclosure process can vary from state to state and is based on your own unique circumstances. But in general, that's how it works. So if you find you're unable to pay your mortgage, the best thing you can do is contact your bank as soon as possible. Because hoping the problem will go away on its own, well, that won't do you any good. We know it's difficult and probably the last thing you want to do. But there are people who really want to help and whose job it is to provide you with assistance. But before you call, get organized and be sure to have all your facts and figures straight. Grab your budget or make one listing all of your expenses. There's a video on this site that can help called Creating a Budget and Sticking to It. Then call your bank to explain your situation and be prepared to get some information and documents together based on what they need. When you call, your bank will be able to fill you in on all your available options. For instance, you could be eligible for a forbearance plan, which allows you to reduce your payments or not make payments at all for a set period of time. But when that period is over, yes, you will have to begin your regular payments again, eventually paying back the payments you missed. This solution tends to work best if you've encountered a temporary loss of income or have had some kind of illness. Another option could be loan modification, where your lender restructures your original loan to make your payments more manageable. A third option is selling your home. While unfortunate, yes, it could be better than going through foreclosure and could help you maintain both your sanity and your credit. And if you can manage to sell your home to cover everything you owe on your mortgage, then your bank doesn't have to be involved in the transaction. If you owe more on your loan than what your property is worth, it's also called being upside down or underwater on your loan, then you could be in line for a short sale. A short sale requires your bank's approval in advance. Here's why. Basically, the idea is that you're selling your home for less than the amount you owe on the loan, and the bank is agreeing to accept the loss to release its interest on the property. It may not be an ideal situation, but it might be better than going to foreclosure. If you have a second mortgage or additional claims on the property as a result of back taxes or homeowners association dues, for example, you'll also need to agree on how to settle those amounts before you can complete a short sale. If you're unable to sell your home in a short sale, there may be another option besides foreclosure. You may be eligible for what's called a deed in lieu. If you qualify for and are approved, a deed in lieu allows you to voluntarily transfer ownership of your property to your lender to satisfy all or a portion of the total amount due on your first mortgage loan. Now, in some cases, you may be responsible for any remaining balance after the transfer. There are also government and nonprofit organizations you can turn to for help. They offer a wide variety of aid and resources to fit a number of different situations. One is the U.S. Department of Housing and Urban Development. You can speak to a HUD-approved housing counselor for free by contacting the Homeowners Hope Hotline at 1-888-995-HOPE, H-O-P-E. One thing to note, be wary of anyone who approaches you with a foreclosure solution, unless it's someone from your bank. There are people who've made it their job to prey on those who are down on their luck, so don't sign your property over to anyone. These same people will do everything they can to make themselves sound like a reputable company. So be careful and be aware. And always remember, unless your bank is part of the agreement, you're still legally bound to fulfill your obligation to the loan. Also, beware of any person or organization that asks you to pay a fee in exchange for housing counseling services or modification of a past due loan. Those type of services are already readily available for free from legitimate and trustworthy organizations like HUD. In the end, only you can decide what's best for you and your situation. And again, as difficult as it may be, all the more reason to call your bank and ask for help. They'll help determine what options are available to you. So while owning a home can be very rewarding, it can also come with some pitfalls. The most important thing to remember is that you have options, and the quicker you understand what can be done, the better off you'll be in the long run.